Yo, yo! What's going on in the hood? How's everybody doing? My friends, my people, what's up? What is going on? My apologies for being a couple minutes late, man. I'm trying to get all this stuff going. You know how it goes. How's everybody doing? Let me know where you're coming in from today. What's going on, Josh Hester? Hey, Josh, you got a 716 area code? Mexico, Ottawa, nice. Good. Chihuahua. Hot damn, Alabama. Damien, where are you from? I'm over here in Destin. Michigan, cool. I'm from Northville, Michigan. The last bastion of hope. Toronto, awesome. We got Toronto's probably like our number 3 city for where we get students. Hungary, cool. Hawaii, man, that's awesome. Whoa, what time is it over there for you? It's got to be, what, midnight? Okay, Shreveport, all right. San Antonio. Oh, man, it's great to see everyone in Massachusetts. Hey, dang, man, Alabama ain't so bad. My buddy lives in Mobile. I ain't gonna say it's nice, but he lives there. We're not going to say it's nice, but my buddy does live there. Colombia, we're in Colombia. I spent like 3 months in Cartagena, Colombia a couple years ago with a couple of my buddies. We had 3 months in Cartagena, 1 month in Medellin. Sri Lanka, what's going on? My Indian brother. All right. Okay, man, we got a lot of stuff to do. Guys, welcome. It's an honor to have everybody. Hot damn, we've got a lot to talk about today. So let's get down into it. First of all, we're going to have a fun time. Second of all, we're going to learn something today. All right? And then, I don't know what just happened there. Hey, Kevin, you in there? Turn your ass on mute. Cool. Now, what we're going to be doing today is something. Hold on here. What we're going to be talking about today is something that's really important. So a lot of you guys have probably seen the market these days, right? The stock market. So the stock market's in just like a straight up kind of run down. It's been going down every damn day for like 2 months, right? So what do you do when the market starts to make a turn? And that's what we're going to talk about today. And this is important for a couple different reasons, all right? This is important for a couple different reasons. You know, I started trading professionally in 2008. In 2008, it was a wipeout. I mean, everybody you knew lost their jobs. I mean, everybody I knew. I'm from Michigan, Detroit. In our subdivision, like where I grew up and my parents lived, almost every single house except my parents went into foreclosure. When we have recessions, it gets nasty and the market crashes. And we don't know if what's happening now is that. Probably it's not. But we're starting to see that kind of action. And what happened in 2008, and I was just starting our business back then, Bulls on Wall Street. But what happened back then was everybody I knew and every trader I knew got wiped out. But I made money. And in the last 10 years, I've been building on those strategies that I used to make money back then. And man, I was just a young man. Man, I had like flowing hair. I'm not talking like, I'm not talking like Viking style where you can like, but I'm talking about Josh. Turn that shit on mute. Hold up. You guys hear that? Good. So why it's important is that in these types of markets, we've got to actually go out and make money. It's not just protecting capital, but we've got to go out and do what we really need to do, right? And that's going to be just huge. And so we've got to go in and figure this stuff out. So today we're going to talk a little bit about market cycles. What are the different phases of the market that we look at? So there's 4 stages of the market, but each phase of the market requires a different type of pattern. It requires a different strategy. What happens with most traders, I'm sure you guys have gone on your YouTubes and your Instagrams and you follow these guys. They say that this is really easy strategy. And you're like, oh, easy strategy? Well, there's no such thing in trading. If it was so easy, right? I mean, come on. Trading is hard. But it doesn't have to be hard. The big part of trading that people miss is that there's a different strategy for each market cycle. There are certain market cycles, 1 out of 8, where you can play penny stocks. Any other market cycle, they cannot be played. They just don't work. You can buy them and they're just going to go down. There are certain market cycles where large cap stocks are not good. There are certain market cycles where you can only go long. There are certain ones where you can only go short, so on and so forth. And so what happens is so many people, they get pigeonholed into, I do this type of thing, and then guess what happens? I don't know what a pre-recorded means. TJ, that's a stupid question, though. What the fuck? What's a pre-record? I never even heard of that. Time out before we start. What's a pre-record? I need to know. I'm not hip with the game. I'm old school. A pre-record. Anybody know what that is? Well, go fucking figure, right? Shit. People record webinars. I never heard anybody record a webinar in my life. God knows I haven't done one. Shit. Holy damn. If people do that, fire them. Holy shit. If you ever met anybody that pre-records a webinar, you know what that means? They don't give a shit about giving you their time. That's all it means. I've never even heard of this pre-record stuff. But fuck, if people are doing that, you should tell them to go fuck themselves. Now, market cycles. Go back. Every market cycle requires a different strategy, all right? You guys have probably seen, like in cryptocurrency, in the stock market, you have big runs, you trade a certain way. Then you have tanks, and you trade a certain way. But each way requires a different strategy, but they both can make money. But you've got to switch exactly what you do, and that's huge. What we're going to talk about today is top sector analysis, bear market, Moss knows, and the key strategy that I use in this market to go out and shred. I'm talking not just the stock market, though. Like, we've been shorting the shit. Sorry for the swearing. We've been shorting the crap out of Bitcoin, Ethereum, even in the cryptocurrency market. When markets go in a downtrend and you get a bear market, you're going to get awesome opportunities. One thing you guys got to get into your heads that will help you, because a lot of people get scared when the markets fall. There's more money to be made when markets fall than when they actually go up. And so when we have these opportunities where the markets are volatile and everything is tanking, you're going to make more money than when it goes up. And so that's important. You just got to train your brain to understand that. At the end, we'll do a little Q&A, and we'll be good to go. So who am I? I'm just filling you in for 2 seconds. I'm the head janitor at this piece. I've had this Bulls on Wall Street company since 2008. It is my baby. It's my lifeblood. Everything you see I do, I am Bulls on Wall Street. Bulls on Wall Street is me. We've had this business for quite a long time. I run this business with my best friends and a couple of my students, my 4 best friends, and 2 of my students, the Oil Lord and Josh, who I've known forever. And we've been running this business since, God knows, man. I started this thing in 2008, but I was solo. And then, you know what happened in 2009 and 2010? I started growing. And you know what happens when you're in a business, you start growing, but you don't have any money yet? You can't afford to pay anybody, but you know you have an awesome idea. What do? Right? You con your friends into coming to join you. And so I've been lucky enough to have my best friends come and join me in this business. They're not traders. They run the back end of the business. And it's been a wild ride. I think I'm the best at what I do. Not about trading. I'm a great trader, but one of the things I'm best at is speaking to people and getting them to understand complicated subjects, right? As much time as I spent on trading the last few years, I spend just as much time figuring out how other people can understand what's really a complicated game. Think about what trading is. The smartest, most crooked people in the world are traders. They have the most money, the most capital. They come from the best schools. They have the best connections. And they all get into finance. That's what trading is. So how do you beat people like that? Well, you beat them at their own game, but you beat them in other ways. By having a better strategy, by having a better work ethic, by having more motivation, more inspiration, more perspiration, right? By going in and having an edge in different manners to what you do. And that's how somebody with $5,000 can beat somebody with $100,000. Strategy, coaching, motivation, discipline. Those are the things that really can even out the edge. Now, it doesn't mean that, all of a sudden you're going to be playing around in the game with billionaires, but that's how you even the edge in any business. For example, when I started my business, I had no money, no resources, and no employees. But I was able to build it into a multi-million-dollar business. How? Extra work, good coaching, strategy. Right? I didn't have money or resources, but I was able to build the business into multi-million-dollar business by working my ass off and having the right stuff going on. And years before that, I was able to do the same thing with trading. So that's where we come in with what we do. So that's why I'm the best at what I do. That's going to be really, really important. Now, one thing to remember. Now I'm going to just go through all this junk, right? We're going to talk a little bit about market cycles, right? Let's talk a little bit about market cycles. So, market cycles. What the heck are market cycles? There's 4 phases to the market. Accumulation phase, distribution phase, run-up phase, and then run-down phase. And this is going to be really important. And guys, by the way, if you guys see me just pause at all during class, we have like a cryptocurrency chat room, and we're like right now like shorting the shit out of some of this stuff. And I have like almost 1,000. I have almost 1,000 shares short of this Ethereum, And we started shorting this thing like, down here, not, and I've been adding along the way. But if you see me pause, it's because, we've got a cryptocurrency chat room, and we've been, we're like all in this trade. And so if you see me pause, it's for just one specific thing. It's just for one specific thing. I may have to come in and make a trade, but if I do it, I'll do it in front of you guys. So I won't mess around or anything like that. But I just want to give you a heads up. If you see me pause or you get me distracted or anything like that, it's for one very, very specific reason. So now let's talk about this. So 4 phases of the market. Hey, Mike, don't worry about it, by the way. And Josh, are you in this thing or what? Hold on one sec. You're like 18 questions behind, by the way, Josh. Hey, Mike, yeah, this is just a webinar thing. Cool. Now, 4 phases of the market cycle, right? Number 1 is accumulation phase. So what is an accumulation phase? An accumulation phase, good. So let's talk about different market cycles, all right? Let's talk about different market cycles. So when you think about a market, there are a whole different group of cycles. So the first phase, so like when you think about it, like what a market is, right? When you think about what a market is, like there are different movements in a market. So when you look at, like, say, the stock market, when the stock market comes down after like a period of time, and it's been just kind of rolling to the downside, right? Usually what will happen after you have like a big dump in the markets for a period of time is the market will go sideways for sometimes months. And this can happen in individual stocks. This could happen in individual ETFs. So like for the purpose of what we do, we will interchange a stock with the general market, okay? So the markets do this and individual stocks do this. After a big dump in a stock or the market, what will happen is you usually don't just get like a rebound where the market or a particular stock just explodes back to the upside. What typically happens after a market or a stock has come down 20, 30, 40, 50%, you start to get into a sideways movement in the market. And guys, remember, I'll answer everybody's questions at the end, so don't worry about that. What you'll have is a sideways movement for a particular period of time, oftentimes months. It's followed by a downtrend preceding an uptrend, which can take weeks to months. Usually during this phase, an accumulation phase, there is no edge. Hey, Saru Swavav, relax, baby. Big Daddy answer the questions at the end. Hey, Joe, I don't even know what confirmation is, but you need a girlfriend. Now, it could take weeks to months to get this thing going. So there's no edge for day traders during this time. Because when you're in an accumulation phase, you know what happens? Market just goes sideways, right? And it goes sideways in just really like kind of like a channel. And when that happens, there's not necessarily any kind of edge to the market. So to have an edge in a stock, you need trend. In trend, you can use all sorts of tools and techniques to have the wind at your back because you're in the process of a trend. But what happens is in absence of trend, stocks will move more haphazardly. the probabilities will go down. Your indicators will not function with the same high probability, and trading becomes a luck of the draw. Some stocks go up, some stocks go down, and you end up with choppy results. But when you trade trends, whether it's up or down, you can make money. And that's the beauty of the stock market. There are both uptrends and downtrends in stocks that are severe. And it's during those phases we can make the most money. But in absence of that, you're just stuck in a range and you'll have much, much less probability. So we never trade during this accumulation phase if a stock is in it or the market is in it. You know, you have other kind of tactics that you'll use. The ending sign of an accumulation phase is either when you have negative news that does not impact the particular stock or market, or you have something positive that thrusts it out of its range. And that becomes really, really big. And you will see this type of action in all different, you'll see this type of action in like all different industries. So like this is like oil, right? So like oil was at like $40, right? This is the ETF for oil, not the actual price of oil. Oil's at $40, comes down all the way to 8. So it's down like 75% off its highs. Now you would think when something gets so low, it would just bounce straight up, right? Doesn't do trading doesn't work like that. What usually will happen is you will enter an accumulation phase that could last for months to potentially years. So like what ends up happening during this accumulation phase is the market or a particular sector will enter some type of range. And during this range, there's no tradable play. Sure, you can kind of buy it and sell it and buy it and sell it and all that fun stuff back and forth, like a little bit in the range, but that's not a high probability trade. So when you're stuck mid-range, there's not as much to do. But what will happen is that all ranges at some point will have, right, a breakout point where you kind of come out of the range that you've been set. And when you get out of it, now you can start a next phase in the particular market cycle. And you're kind of seeing this right now, like in natural gas, right? So like natural gas, if you look at it, right, this thing has been stuck in an accumulation phase pretty much all year, right? You can see like it's been natural gas been hanging out this $50 mark. And then what you'll see here, right, is, you know, this whole year, it's been kind of just hanging out between 50 and this, I'm looking at the ETF, so not the actual price of natural gas. The whole year, it's been kind of hanging out in the same range, right? Been coming up and coming down and coming up and coming down and coming up and coming down. So like during this phase, there's no edge. There's not much you can do. It's called accumulation phase for a specific reason. During the accumulation phase, buyers, big name players, mutual funds, hedge funds, they are essentially accumulating the stock or the market because there's no volatility at the point. So they can kind of catch it while it's low. During this phase, people will sense value. So they come in and kind of pick this up. But as short-term traders, people that have retail accounts, right? We don't have millions of dollars. We can just sit around for months and 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 wait. We have to stay out of the zone. But what will happen is when you finally come out of the zone, you start your fun part of the market where you can start really getting this thing going, right? And so like this thing like rips from, so it's been accumulation phase all year, and it's kind of been sitting between 52 and let's say 69, right? So like a very just small, it's just a range. But when it finally comes out of that range, now what happens? You start to really pick up steam. And this happens in individual stocks, in the general market, whatever it is. This accumulation phase is a phase that we just we just stay out of, right? But what happens is when you get out, that's when you can have like a lot of fun. You know, I remember one of the biggest trades I've ever taken, and this is way back in the day, was in this Tesla. This Tesla sat in an accumulation phase for like 2 years. It set an accumulation phase for like 2 years, right? And you can just see like how it's just stuck in a tight range. So during this accumulation phase, there's no movement. There's no action. You know, a stock is just dead. Sure, big players are accumulating it, but can you trade it knowing that you're going to sit in it for months to potentially years? No, you can't. But what happens when you leave the accumulation phase, the next phase starts, which is your good old-fashioned run-up phase, right? Your run-up phase is your bull market type of run. That's where you get everything working for you and the big juice comes. So we want to stay away from periods where there's no trend, because how much money can you really make? But what happens is when you leave that accumulation phase, that's when you have the big, that's when you have the big momentum, right? And so, and same thing happens like in any kind of thing. It doesn't matter if you're looking at cryptocurrency, Bitcoins, it don't really matter. Like every one of these follows the same rules of man. And I've been using this kind of technique for really ever. So like, see this, like, check this out. So like, this is like Ethereum. You can see for like a year, right? It just sits in this range for just like almost a whole damn year, right? Just sits around and you're just kind of in this accumulation phase. But when you finally get out of it, right? So you built a range. When you finally get out of it, that can start your next phase, your run-up phase, where you can make 200, 300, 400% gains. Very, very important, right? So if we are in this range trying to trade, we're fighting for pennies. We're fighting for peanuts. But when we come out of it, we're fighting for something much more impressive. So the next phase of the market is your good old-fashioned run-up phase. That's your bull market trading. This is the easiest time for market participants to make money. It's a momentum playground. You're looking for good volume patterns, upward price movement. Any type of dip is considered a buying opportunity in those markets. It's not considered signs of weakness. They're considered profit-taking events that you can use as opportunities to get long. Dips are considered buying opportunities, and then breakouts follow through. And so that becomes like really important no matter really what industry you're looking at. But like say you're looking at Bitcoins, for example, right? And I'm just kind of talking about this right now because, you know, the market's crashing. But what happens is, and this thing's been uptrend for a while, right? But like what happens when you start to get into an uptrend and you're not in an accumulation phase, when you get short-term corrections like dips down to moving averages, when you get them down to levels of support, they become buying opportunities. And that happens like over and over in a trending environment. Short-term corrections or dips, they become buying opportunities as long as you know how to time them, and then they can go on for like a long period of time. So just something to be just mindful of. And that'll happen in really individual stocks or, you know, anything like that, right? You know, when you've got like big name companies, stocks that are doing good, right? Like all the dips become buying opportunities because that's how stocks act in a run-up phase. But when they're not in that phase, you know what happens? All bets are off, right? Now all of a sudden it's a hide your kid, hide your wife, hide your money because, right, you're in a crash mode. And so we want to really focus in on periods. If you're buying stocks or buying cryptos, focusing on periods where you're trending higher. How do you know that you're trending higher besides just price, guys? Give me a heads up. How do you know how do you know that you're trending higher besides price? Give me a rundown. Volume, okay, good. Moving averages, good. 200 MA, good. Higher highs, higher lows, good. Man, these are all great ideas. So a couple ways that you can identify trends. Number one is just via price. Is the price going higher or lower? Right? Probably the easiest way. Number two is your moving averages. The slope of your different moving averages can signify whether you're trending on a particular time frame. So your 9 EMA is your short-term time frame. 9 EMA is your short-term time frame. So if the 9 EMA is pointing higher, short-term trend is up. If it's pointing down, short-term trend is down. And that'll give you a good signal too, like when something's rolling over, because your short-term trends will reverse before your long-term trends. It'll give you a heads up. Your 20 SMA, 50 SMA are your intermediate, and your 200 is your long-term. So when your different moving averages start to curl down, it's telling you on a particular time frame that, hey, things are starting to reverse. Hey, John, welcome back, baby. So just something to be mindful of. In a run-up phase, and be mindful of this, in a run-up phase, this is where you're pushing your chips in. You're trading more aggressively. You're probably trading more size. During this phase, you'll probably have more positions going. You're going for the full-blown, hey, we're in a bull market, I'm pushing my chips in. So that's your run-up phase. That's your fun phase. For most traders that are like not well taught, this is probably going to be your easiest market. It's going to be the market where you make the most money. Because in a bull market, it's like, you know, sometimes in a bull market, you can just get lucky. Look, it's hard to make money as a trader, but in a bull market, you can get lucky. In a bear market, a rundown phase, accumulation phase, can't get lucky. Distribution phase is a market cycle that's actually very tricky. It's a period of consolidation where you have low volume, low volatility, and you're range bound, similar to an accumulation phase, but it comes at the end of a run-up phase. So it comes at the end of a run-up phase. So your distribution phase is the phase like where you're near highs, but you're starting to top out. Hey, Adam, how you doing, buddy? Where you're near highs, where you're starting to top out. Don't confuse distribution phase with bear market. What's happening is when you start to get into these areas of distribution phase, your distribution phase is this. After a big run up and a stop, you'll have a period where like you're near highs, but volatility will start to increase. Where like, see, what happens in a bull market is your size of the candles are really small because the market just goes up a little bit every day. But what happens is when you get a distribution phase, the size of your candles and the volatility increases. What you'll start to see is like big selling spikes that start to dwarf your green days. So you start to see the red start to, in volume, start to increase and dwarf the green days. So what that's telling you, guys, when you see bigger red bars and you're near the top of a stock, when you see bigger red bars than green bars, what it's telling you is there is a shift in control and ownership of the stock from smart money to retail money. All of the sudden, the people in the know are selling to the ma is in pause, saying, take my shares. And so what you'll see is an increase in selling, even though the stock is hanging out at highs. You start to see that increase in selling. And what that usually, that's your distribution. So during this phase, like you'll see a stock at highs and you'll think like, wow, like it's at highs, everything should be good. No, there is a shift in control of that stock that happens, right? And this becomes really, really important. Like you can see this, like even this NVIDIA was in this epic trend for like a long time. See it? Then what starts to happen is these things start to top out, right? Like you start to see like big selling. You start to see all sorts of stuff coming down. You'll see this with Netflix too, right? Like see like how this stock was an epic trend. Hey guys, I make about half my money in shorts. You got to learn how to short. Today, let's see. We made $2,300. I made $2,300 today, but a good chunk of it was on short. Longs and shorts, of course. But like you got to learn how to do it. Got to learn how to do it. So what I was saying is like as this thing is trending, what do you start to notice here? And this is how you know a stock is topped out. What do you start to notice here? As this thing is breaking out the highs, what do you notice here? Right here, guys. Come on. There you go. The candles start getting bigger, don't they? Big red. Good Paul. That's my man. Good Damien. That's my man. Good Ivan. That's my man. Good Taylor. Hey, tell your dad I said hello, my friend. Good. Big red candles. What do you start to see with some of this little volume? You start to see that selling come in, don't you? Start to see a little selling come in. That's when you have the sign that something is about to roll the F word over. I mean, look at this thing. This thing got up to $450. I mean, it's been cut in half. Cut in half. And all starts with a little distribution. Hey, Ari, I'm the only one that can see it, by the way. Now, your next phase is your rundown phase. This is like your straight up, and Ari, and TJ, we're using, I mean, there's a handful of things you do. There's never one-off thing. I'm just showing you the volume patterns at the moment via price patterns. Now, I got you. I'm on your team, bro. Rundown phase. Rundown phase is your good old-fashioned bear market type trading. Now, bear markets they don't last forever. Most bear markets, sometimes they just go down for a few months. And, we're kind of in that bear market trading right now. Right now. It doesn't mean it's going to last any longer. The market could rebound tomorrow, but most big name stocks that you follow, like Netflix, have been cut in half. Right? Facebook, cut in half. So now the easy money's really been made on the short side in terms of betting on stocks to go down. That's why, we've really been in kind of bear market trading for a while. Even though now people are talking about it, the stocks have been showing this for, at least a few months. Bear market trading. Can't trust gap ups in stocks. Good news and earnings get sold off. You can play bounces in the rundown phase if the market is really oversold, and you have to trade really quick. So your rundown phase is where people are just selling on top of each other. So let me just kind of run you through what a rundown phase would look like. So let's think about 2008, right? And this, I mean, we've dropped quite a bit here. but nothing like, you know, what we saw in 2008. So this is what happens in a real rundown market. I mean, you're talking like a crater. So why does it happen like this? Think about it like this. Say the whole world owns, you know, a stock at $100, right? And everybody in the world knows that this stock has to die because the economy is going to go in a tailspin. Everything's going out of business, blah, 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 whatever. I mean, it doesn't really matter, right? But what if everybody knows? Like, we all know this stock is going to go down. Well, can we all, and it's at $100, can we all sell it, if we're the whole world, can we all sell it at $100? No. Because for every seller, me and you, there has to be a buyer. So if we all want to sell, but there's nobody left to buy, what happens? We all start to sell on top of each other. We all start to sell on top of each other, and we keep lowering our price. We keep lowering our price, and then what happens, it's like an auction. Nobody wants to buy it, so I start lowering my price, you start lowering your price, and then we're looking for somebody to buy. But if in absence of buyers, what can you do? So we're just all kind of lowering our prices till prices crater. Imagine you're in 2008 and you owned, you know, imagine you're in 2008 and you own Citigroup or something, right? Imagine you own Citigroup. Well, and everybody knows this thing's a huge turn, right? Well, if we all want to sell and nobody wants to buy, this thing just going to come cratering down. And that's what happens in the rundown phase. We are competing with each other to sell. And yeah, it's just whoever wants to sell first gets priority. Well, you know, I'm sure rich people always get priority first, it seems like. But in terms of your broker, right, if we're all selling at the same time, it's just first come, first serve. Just something to keep in mind. So those are the different market cycles that, you know, we've got to really, really be aware of. And this happens like in every single type of market, every single thing. And Mari, I'll help you with that, by the way. I'll definitely help you with that. So these are kind of a few things that we've got to learn. Now, the good thing is these days, like you have software, like, you know, we use software like this TC 2000 and stuff like that, where, you know, we're alerted to different shifts in stocks, different shifts in the market. And so, you know, we have to apply our knowledge. But I mean, look at, you know, the software and stuff. Like I use this thing, it costs $30 a month, you know, and you can do anything you want on something like this, right? So we have so many advantages that people 10 years ago, like when I started, didn't have. Hey, Raven, that's a really good question. Where's the live trading? Raven, you got to Google it, but, you know, market is not open right now. It's like 9 o'clock. Right? So, and by the way, guys, if you are, I'm just teasing, by the way, well, tomorrow will be the live trading. I got you, brother. I'm always in your corner. But you should also know what time of night, day it is. It's going to help you long term. You know, if you know daytime, nighttime, morning, I mean, you're going to be a better person. But like when you're doing method stuff, you can be up all night. I know. I'm not saying I've been there, but I watch a lot of TV, but I watch some TV. So I'll see it in the morning, Raven. We'll do this thing at like 8 a.m. I'm just Raven, by the way, I'm just teasing you. I'll be trading in front of you guys all day tomorrow, right? Unless I get just smoked out and I got to hide my head between my tails. But I'll be trading in front of you guys all day tomorrow. I'm excited about it. Now, like I was saying, I know a lot of you guys are coming into our next class that starts November 27th. So Ryan, Tim, anybody? Okay, Ryan, Tim, Chad, anybody that's coming into the November 27th boot camp class that has not gotten the scans and layouts to TC 2000, just put in your email or your phone number. I'll have Omar, my guy, reach out to you guys, and he'll make sure to get you all the layouts. The one thing with TC 2000 is like you just have to you literally just have to just open up the link that I send you inside TC 2000. So you don't actually have to do much. You don't actually have to do much. You'll just, the plan in the beginning of class, so, you know, when we start class on November 27th, the plan in the beginning of class is just, I give you guys my layouts, my scans, and then over time, you'll make them your own. And so, you know, I'll send them to you tomorrow. You know, I don't got any turkey plans. So put in your email and your phone number or whatever if you need Omar to send you the scans. Obviously, scanning is just an important part of thing. All this analysis that we do always comes from the scans. Stock sector analysis year to date, right? So what we use is like ETFs to figure out what's moving what. How is the healthcare market moving versus the utility market versus information tech, blah, 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 blah. Mr. Butler, I got you, by the way, brother. I got you. 904. So are you in Jacksonville? I'm in Decimate. You got to come to my house. Material, so on and so forth. So what I use, guys, on my TC 2000, I keep a list of indexes. And then what I do is I run a sub-scan. This is very important when you're thinking about scans. Run a sub-scan. So I keep a list of indexes. And I put momentum 3 months. So what I do is I run, even on indexes, I run a scan for 90-day momentum. Hey, Raven, my mentor is Paul Singh. He works with us at Bulls on Wall Street. Dude, he's awesome. He teaches a bunch of our classes too, by the way. So I run a 90-day momentum scan to see like how the indexes are doing over the last few months, just to see on a numerical value like what's going on. And that really, really helps. Now, bear market must-knows. I'm going to teach you guys a couple patterns, so stay with me here. I know we got a lot going on, but stay with me. So bear market trading patterns. I'm going to teach you 2 trading patterns that you can go out and make money on it tomorrow, all right? When stock prices are crashing, selling is encouraged. You got to know how to short stocks. You got to know how to use reverse ETFs. These are going to be the most important things that you do. So when you think about shorting stocks, all right? When you think about shorting stocks, remember that stair steps up, elevators down. So the first setup that I like to use in a bear market is a bear flag setup. A bear flag setup is a momentum stock. It's a momentum stock that's had a long period of consolidation in the lower part of its range. We're looking for weak downward movement, preferably on higher than average volume. Maury, I got you, by the way. Josh, I got you. Guys, I'm pumped to see so many guys coming in November 27th class. It's 60 days. That means we've got a lot of work to do. But I tell you what, by the end of 60 days, you might just be a trader. We're looking for weak downward movement, preferably a higher than average volume. I'm looking for several candles of consolidation, ideally retracing back to the SMA or EMA. We're going to short on the bottom of the range, stop over the top of the range. Then, of course, we align our daily and intraday charts for short-term trades. So that's a mouthful, isn't it? I know. I mean, when my mentor is teaching me trading, I'd be like, what does all that mean? And this is what he told me. He goes, in trading, each trade is like a recipe in a cookbook, Kunal. your trade, whether it's XYZ or this. So in this one, it's a bear flag. Okay, so say you're making this dish, this beautiful bear flag. Well, think about what's inside a cookbook. You have very, very specific recipes in terms of your ingredients. Then you have a specific sequence of how you're going to cook it and put things in. And what happens is when you do everything in the right order, all of a sudden you have a beautiful dish. But if you're missing a couple pieces to your dish, you know what happens? Your cake tastes like meatloaf, right? Like all of a sudden, it's not there. And so that's how trading has to be. When you think about trading, you've got to think about what is the recipe for each trade. So I'm going to show you some pictures of what all this looks for. But right now, I just want to give you some characteristics of what the recipe looks like. And then from there, we'll be able to really nail this down. So we're going to short on the bottom of the range and the stop over the top of the range. We'll align on both patterns. So this is like your quintessential bear flag pattern. All right, this is your quintessential bear flag pattern. So this is blue. So this is like a trade I took. This is just recently. So like you can see like blue's like in a big downward pattern. Remember, if you guys don't have these type of charts and you need all the indicators and stuff, just put in your name, your phone number. If you're coming into the November 27th class, I'll make sure to get you all my layouts and stuff tomorrow, so you can start practicing with them. And I'll have one of my guys call you and walk you through. But it's pretty self-explanatory. So this thing comes all the way back down, right? So notice how this thing goes from 170 to 130. Actually, Ivan, they are. Half my students probably use Thinkorswim. So now notice how like this stuff comes down to 130. Now notice how you start to consolidate. For a bear flag, you need at least 3 to 10 sideways candles. Guys, 3 to 10. Garrett, I got you, brother. Always in your corner. 3 to 10 sideways candles. All right? So what happens during this sideways candles? Do you know, like, after something goes from 170 to 130, why would something go sideways? Think about it like this. Stocks are like people. Stocks are like people. After they run for a while, they've got to rest, right? Stocks are like people. After they run for a while, they got to rest. That resting phase is very, very important. That resting phase is so important for one particular reason, guys, that when you go sideways, you build up steam. Stocks get their power from consolidation. They get their power from going sideways. When you go sideways and you rest, you build up the steam to go further. And the stocks typically break in the direction of the overall trend. So it becomes really, really important, doesn't it? So what we've got to do is as it goes sideways, we have to take it as a sign that lower prices are coming. So the key to all bear flags is the 9 EMA. That's your light blue line on your TC2000, right? So whip out your TC2000. It's the light blue line. When the light blue line comes right up on top of it, notice how it starts to curl right on top of it, right? We call that curls for the girls. When it curls right on top of it, that's your sign right there that the stock is ready to come flushing down. So as you see it, and you can only take the trade, like you can't take the trade here. You can only take when that 9 EMA is crossing through. That's your sign that it's ready, guys, all right? Because otherwise, how would you know if it's you're gonna do it here? You know, right? You gotta let that 9 EMA start crossing through. When it's curling on top of you, you're gonna take the short, meaning you're gonna bet on the stock to go down. Guys, you can bet on stocks to go up. You can bet on stocks to go down. You take it short. You get short, put your stop above that 9 EMA. So you're gonna risk maybe $1 or $2 on this stock. And then you're going to shred this thing back down to the downside. Correct. That's the way you got to do it. Now, one thing to always remember when you put a stop loss, you always want to use a half candle's worth of room. So, like, if a stock is moving around, like, say, $3, $4, $5, wherever your EMAs are, you want to use a half candle's room. So your stop loss is going to go probably about right around here. Always use half candle's room, even when you're day trading. That prevents you from getting shaken out, TJ. Always remember that. Otherwise, you get shaken out all the time, right? We don't want that. We don't want a good shake and bake, right? What we need to do is, hey, Raven, relax, baby. You need to take a little chill pill. Take your Adderalls, all your little fun stuff, and go chill, baby. You know what you should do? Masturbation. Best thing for people that are strung up. Take a little masturbation, have a little cigarettes, you're good to go. You got it, Joe. Guys, Raven here needs a girlfriend. I'm going to give you his email. You guys can message him and find him a girlfriend. That's the way we want to go with it, right? So we get short, set your stop, let her up. I mean, unless Josh wants to help him out, but I think Josh is gone for the day. Now, you can do this also intraday. So intraday is the same thing. We trade on 5-minute charts, right? We trade on 5-minute charts. So by the way, a bear flag on your daily chart, this is what we're looking for, right? You're just looking for a handful of things. Hold on here. I got a whole list of these bad boys. Check this out. All you're looking for on your daily chart. So this is what you look, right? You got yourself a downtrend. So I'm in this one right now. So you got yourself like a nice downtrend. Now look what happens here. Stock pops up a little bit, comes back down, pops up, right? It's when that 9 EMA comes right up on top of it. When the 9 EMA comes on top of it. Hey, Raven, Timothy Sykes, baby. That's your guy. When that 9 EMA is coming right down on top of it. See how you're coming down? See the 9 EMA is touching it. That's when you got to go. You get short, set your stops. So look, where would you short this? Let's look at where the price is. Where would you short it? Where would you short it? Where would your stop loss be? Good, guys. Good, Diana. How you doing? What's going on in Pittsburgh? Exactly. Yeah, give or take 85-ish, right? 86. It never has to be exact, right? Where does your stop loss go? Well, you probably put this thing like, a couple bucks right above this 9. Awesome. Now you're in this game. Now, okay, so you're in this thing. Now what do you do, right? Like, what do you do? So I'm in it. What do I do? Like, how do I know where it's going to go? Well, I try to do it like this. Say, like, from where I short to where I put my stop loss. Say that's $1 or $2. I need to make at least minimum $4 to start the cover, right? Meaning cover means get out of the short. So once I get to that point, I start really watching it to get out some of it. Now, usually I cover half when I get to one of my targets, and then I put a stop loss in my buy price, and then I let the rest ride. Does that make sense? So just something to kind of really be mindful of. And guys, this type of pattern, I mean, Facebook just did this, didn't it? Right? Seeing this coming down, right? So you got 1 tap, 2 tap. You need always 3 taps, by the way. 2 taps are for losers, 3 taps are for winners. 1 tap, 2 tap, 3 tap, 9 EMA, curls for the girls, right? Curls for the girls. Now, remember, guys, you don't marry these things, right? As short-term traders, I mean, we're holding 3 days, 5 days, 10 days, maybe even sometimes. But, like, we're not marrying them. Does that make sense? You know, if you start to marry them, all of a sudden, you're in a lot of trouble, right? We want to take our profits as these things come down. You know, I mean, look, if you risk $2, $3 and you make 15, that's great. Now, I know a lot of you guys have smaller accounts and you're wondering, like, well, I only want to trade penny stocks. Well, let me tell you something about penny stocks. Penny stocks for hoes, right? It's for chat rooms that make their money off selling to their subscribers. You don't need to trade penny stocks. Say you've got a small account and you want to short a stock like this Twilio or something, right? Say you were short this thing the other day at 88 and it drops down to 72 and you only have 100 shares. I mean, you could still be up over $1,000 and you don't have to put very much capital and you would have a small amount of shares. You know, I've got some students of mine, they trade like 50, 60 shares of stuff. And I trade small caps sometimes, but I'm saying, you know, in general, we want to trade stocks with range. Meaning, like, can they move dollars? Because it's easier for us to trade in and out, up and down of a stock that's moving around dollars than something that's moving around cents. When you're moving around cents, there's no liquidity, and you are beholden to other people. Penny stocks only move on one thing. Remember this, guys. Write this down. Penny stocks only move on one thing. Chat rooms. That's it. They don't move around anything else. They either pump and dump or chat rooms. That's it. So unless you're in the right one and you know the owner and he's telling you before all this stuff is going on, they're not moving around. As traders, like real traders, people that want to build their own hedge funds and make real money, they have to trade stocks that have an organic order flow, stocks that will move around on their own. Because then you are beholden what? To the chart, not to a chat room, pump and dump, right? Some just thing just getting spiked and then fading off. How many times have you seen a stock? This is what happens with small caps. This stock's at $1.25, has some news, it pops at $3.20, and it comes all the way back. How many times have you seen that? Over and over and over, right? That's just what they do. You know, so we don't even need to be in that stuff. There's other stuff to trade. So now think about this, like intraday bear flags. Intraday. So how do I trade something that has like an intraday bear flag? Good question, right? So all an intraday bear flag is the same type of thing as a bear flag on the daily. But like what you're going to do is have a stock that spikes down, goes sideways for a period of time. You get that 9 EMA crusting down on it, and then you get the downside to it. That's all you. It's the same thing. When you are looking at something that is just a trade. It's the simplest stuff. Intraday, so when I trade, I use a daily chart on my left side, 5-minute chart on my right side. So what I need to do is have a stock that spikes down, goes sideways. I need 1 test, 2 tests, 3 tests. And what do you guys notice about this one? Come on, what do you notice about this one? Just like any other, this is a day trade, right? You can take this for a day trade. 1, 2, 3, 9 EMA, curls for the girls on top of it. Doesn't have to be too crazy. Curls for the girls on top of it. Now you're ready to go. You get a short, Set your stop. Let her rock. That's it. It doesn't have to be like this big, elaborate thing, does it? It doesn't have to be this big, elaborate thing. Short, set your stop, let her rock. Guys, where would you hit this? Give me a rundown. Where would you hit this? Good, 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 good. 38, good. 37, good. Yeah, you're going to be in that range. Remember that if you have a stop loss and it's like 25, 30 cents away and you make a couple bucks, that's really good reward to risk. Remember that no matter what your account size is, if you take 2-3 points on a $30 stock, and even if you just have 100 shares, still a couple $100, right? Sure beats working, right? Sure beats what a lot of people have to go through to make money. So that's where you got to always think about that. I typically use limit orders, my man Blair. Same type of deal. Check it out. Gap down, 1 test, 2 tests, 3 tests. Check this out, though. What do you got? 9 EMA, curls for the girls. Where are you going to short this thing? Come on, give me the number. Where are you going to short it? Woo! There we go. Yeah, about 30 bucks. Stop loss, I mean, you're only risking maybe 10, 20 cents, right? That's the type of trades we need to get into. That's where we got to go in with this stuff. Now, let's talk about inverse ETF long plays. When volatility increases with the market pullbacks, inverse ETFs can be a great account building trade. We look for momentum types of breakout, ORBs, first pullback buys, first breakouts. So what is an inverse ETF? A stock that you can buy that increases in value as the sector it represents decreases in value. So there's a handful that we use. So like we use TVIX. We use a ETF called TVIX, and what TVIX does is it goes up when the market goes down. So we were talking about bear flags, right? Where you have a stock that goes down and it goes sideways, and then we break lower. Well, the opposite happens. So TVIX is an ETF that goes up when the stock market goes down. So same type of deal. We just learned bear flag. We do it in reverse on TVIX. So when we want to short the market, because a lot of times, a lot of you guys don't have shorts, right? It's like, well, how can I short something if, right? Like it's, you know, if I'm in my IRA or something like that. So what you can use is TVIX. Hey, Eric, I got you, brother. I will explain everything as many times as it takes, my friend. So like this is something that, see how this pops up? So you make yourself a flagpole right here. See that? I got you, Craig. So you get yourself a flagpole right here. And then notice how you start to come back down. Pop up, 1 test, 2 tests, 3 tests. And so what you got here is a flag. That's all we're talking about. Just like we had a bear flag, now we've got ourselves a bull flag. So as this thing starts to break, the key is what? We just learned this. The 9 EMA's got to curl right up under it. See that? Got to push up under it. When it does, you can buy. And when I say set your stop, what I mean is like a stop loss is essentially where you're going to look at a stock and say, if it goes against me at this level, I'm going to get out. Does that make sense? Cool. Good, 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 good. SQQ. SQQ is an ETF that bets against the tech index. So your NASDAQ is your tech index, right? So, and Blair, you can do inverse ETFs even in your Ameritrade account, your Robinhood account, anywhere. And yeah, you can day trade TVIX. I day trade it every day. I believe today, let me see. Yeah, I made $500 on this thing today. 558 bucks. So SQQ is an ETF that bets against tech stocks. So like your tech stocks is your Facebook, your Google, your Apple, right? When those things are rolling over, you can buy SQQ, and when the tech stocks go down, SQQ goes up. So like a lot of times, like in your IRA or 401k, you can't necessarily, right, short things. Maybe you don't want to short things, like you just like to buy things. Well, and you don't want to do any bear flags. Well, you can buy something like an SQQ, and it represents a tech index in inverse. So you can like even see in this last market dump, I mean, this thing went from 11 bucks all the way to 62. 16, I mean, not 62. That would be wild. Pretty cool, right? Yeah. And then like small caps. A lot of you guys trade small caps, right? Well, TZA is an ETF that represents the small cap market. And so what happens is like when small cap market, hey, Ernesto, I got you, brother. Austin, Texas. Hey, my business partner lives in Dallas, but we come down that way all the time. So when TZA when this goes up, it means the small cap market is going down, right? And so you can see like this one goes from 782 to 1296. 782 to 1296. Pretty cool, right? Hey, Mari, yeah, I trade when I'm day trading, I trade 5-minute charts, but when I'm looking at longer term charts, like swing trades, Chris, I'll get you the recording. When I'm doing longer term charts like swing trades, what'll typically happen is, we use daily candles. But as traders, guys, we have to learn how to do longer term trades and also day trades. Of course, and I'm excited to trade in front of you guys tomorrow. So an interesting day trading technique you can do with TVIX, we call this a quick pullback buy. So you typically what will happen is like if TVIX has a strong open and it starts to pull back to its 9 EMA, so like guys, a 9 EMA on your TC2000 is always your blue line. Remember that. On TC2000, your 9 EMA is always your blue line. Oh, what the heck? Your 9 EMA is always your blue line. So like when you're looking at your TC2000, make sure that the 9 EMA is always, it's always the blue line. But that's going to help you a lot because you want to always kind of match up your colors and stuff. But this is like your classic intraday setup that you do. So, if you get a strong push on TVIX in the morning, the first thing that we always do is we want to watch it. If it pulls back to the 9 EMA and you get a green candle to hold, we call this a quick pullback buy. What we're going to do is we're going to add this thing for buy, set your stop, let her off. So anytime in TVIX I see strength, and then on the 5-minute chart I pull back to the 9 EMA, I get a green candle to hold, that's when I want to hit this thing, and then I can play this thing back to the upside. Yeah, Ryan, I can get you the scans for this. Ryan's asking for the liquid gainer scan. Here you go. Hold on. Yeah, so if you want me to send you the layouts, just message me on TC2000. Guys, anybody that's coming into the next class, just put in your email. I'll make sure to add you on this stuff so that you can get the algos and the different scans and stuff like that. Ryan, and I'll send this to you tonight for sure. Yeah, TC2000 is kind of cool because you can change around all the colors and stuff. So, like, you know, you can go in here and say, like, all right, like, I want this thing to be green. I want this one to be purple, right? And so you can come in and, like, I mean, you can do some kind of cool stuff with it to make yours look really unique. Yeah, for sure. Yeah, just put in your number, and I'll make sure Omar gives you a call and gets you all the info and stuff like that. I got you, guys. Don't worry. Remember, push up, come back down to the 9, and then go. Multiple chart layouts are really important because, you know, first of all, you got to train your eyes to see the stuff. That's hard enough, right? But then you like, yeah, you got to have multiple chart layouts to kind of just really be able to see everything. And, you know, on TC2000, what's cool is like, see, like it's modular. So like I can do this. You can hit new layout tab, and like I can put up 9 charts if I want, Maury. So I can have charts and different layouts and shit like, I'm sorry for swearing, but you can do a lot of stuff. So you can come in and do that. And yeah, just, you know, get the gold package and you're good to go. So guys, when you're trading this stuff, man, I've had some crazy days trading these type of volatile markets. I mean, up $20,000 days, $2,000 days. I mean, and everything in between. Just trading these kind of volatility ETFs. Like I've made a living on them when the market falls. Like going in and trading this stuff. It's important to learn how to trade the market both ways. Like we've all, and I was like this too. Like we all get so trained to just think like markets go up and markets go up and this is how we make money. And it doesn't have to be like that. Like even in bull markets, like when the market's going up all the time, I still am betting on stocks that go down. Like there's certain types of stocks, maybe it has bad news out or earnings out. I'm always trying to short stocks if they're turds. A turd is a turd no matter what, right? Unless you just eat a lot of vegetables, then, you know, a turd isn't so bad. Blair, yeah, like, you know, I'm usually trading between 75 to 100,000 in buying power. So that's not the size of the account because there's margin. So, I mean, you probably, you know, 40, 50 grand usually. For the most part, though, you know, I usually keep it like 60,000 in buying power and stuff because I don't like trading too much size. It gives me, I'm trying to just trade the mornings. I'm not one of those guys you'll see that's like trying to go for like $100,000 days and stuff. I live on the beach over here. You know, I'm in my 30s. Like, you know, I try to trade for like an hour or two and bail. My students are always like, dude, you gonna stay today? And I'm like, no, like, no, it's past my bedtime. Why 95% of traders blow up their accounts? Number one is poor risk management, right? Poor risk management is, I mean, it's such a cliche though, right? Everybody talks about poor risk management. What does it mean? Poor risk management means two things. Number one is that you're not managing your risk per trade. You're not managing your risk per trade. You know, I risk X amount of dollars per trade so that even if I lost like 5 or 6 trades in a row, it doesn't hurt. That's good risk management. Second part of risk management is understanding your price patterns, all right? So we were just talking about it today, right? Curls for the girls. Raven, I do swing trading, of course. 100%, brother. So your curls for the girls. If you were doing a pattern with curls for the girls, where do you put your stop loss? Half candle above your 9 EMA or below, right? Depending on the pattern. If you were doing a base breakout pattern, you would use a different style of stop loss. So what happens is your risk management is dependent on the pattern. Of course, Kevin, I got you, brother. Bad timing. Now, the other part of risk management that's important is understanding your personal patterns. Anybody ever, guys, give me just a heads up, all right? Right? Anybody ever, like, they understand so much about what they're doing, but they make an emotional mistake and it costs them money? Happens in trading all the time, right? You know exactly what to do, but you didn't do it. And isn't that happen so much in life? You know what to do and you don't do it? Man, I spent a couple of my years, right, in the beginning. Like, I knew textbook what to do, and I still wouldn't do it. And my mentor, Paul, kind of taught me something about just breaking those kind of habits. He said, Kunal, well, that's just a fact of life. He goes, you ever drink too much? And I'm like, yeah. And he goes, and you know you're not supposed to. I'm like, yeah. He's like, you ever smoke any cigarettes? I'm like, yeah, of course, right? And he's like, but you know you're not supposed to. I'm like, yeah, you're right. And he goes, and have you ever eaten too much pizza? And I'm like, Paul, I'm going to be honest with you. I eat a little bit too much pizza all the time. He goes, and you know you're not supposed to. And I'm like, yes. So he goes, that's all risk management. I'm like, shit. He goes, it's just a part of life that we sometimes know what to do and we don't do it. But how we change it is by just making small goals and then incrementally getting a little bit better. We call them micro goals in our class. And if you just do a little bit better every day, all of a sudden you've changed it. But it all starts with just one day, right? And if you can break the habit just one time, then we can do it 2 times. And if we can do it for a week, it's pretty much gone. And when I was having trouble with my risk management, some of the stuff that Paul was teaching me, that was the whole ball game, right? Like, it was like, when he was told me, I'm like, holy shit, like, you're right. And what we worked on was like, okay, let's do something small today in your trading for your risk management that we can build on the next day and then the next day. And then what happens after a week, he's like, did you make that mistake anymore? And I'm like, I'm not even thinking about that mistake. And he's like, da-da. And I'm like, dude, you just Miyagi'd me. He's like, yeah, I did. Right? And that's the shift. So there's poor risk management, but then also, and don't trade from your phone, by the way, Mr. Mike. Poor risk management. And then there's also the point of, we need you guys to have personal management, right? There's times where we get ourselves in trouble that there's certain things that set us off all the time. For example, like if I get in a fight with one of my friends, it boils over into my trading. Like, we're fighting and we're mad at each other, and then I go off trading, and also we're all pissed off at each other. That happens. You could get in a fight with your girlfriend, right? And that could throw your risk management off. So those are all the different things that really, really can throw your risk management off. That becomes really important. You've got to understand your personal patterns just as much as your chart patterns. Personal patterns as much as your chart patterns. What are the things that get you in trouble? Write them down. Keep a note of them. Get an accountability partner. Even if it's me, right? Get somebody to say no. When that happens, you get yourself in trouble. Good. And David, I've got an answer to that question. It's going to take me a second. I'll get it for you in a few. Bad timing in the entry and exit. Trading psychology influencing on trading. Guys, your trading psychology is so important. Why? So if you're trading and you're competing against people that have more money or more experience than you, what's your edge? There's different edges in life, right? An edge means an advantage. Well, your personal discipline, right? Your personal intestinal fortitude. Well, that can be an edge against somebody else. for me, you know what? It was an edge for me for a long time growing up. Not grown up, but like, as I'm building businesses and stuff, is this. It's 9:30 in the morning. I'm shouting at you guys. I've been shouting since 6 a.m. But I have the energy to do it. Well, that's an edge, right? That's an edge. I can exploit that. Well, working hard, working long, that's an edge that I can exploit, right? Because I just have the energy to do that, right? Everybody's got different edges. My business coach, Ben, he's got like crazy discipline to get like stuff done that he's trying to get done. Whether it's eating right or this or that, like it's just crazy. He's got just a crazy internal discipline. So there's different types of edges, but your trading psychology of how you develop whatever edge you have, because we're all good at something, that becomes big stuff. Poor preparation. You're right, Raven. Actually, we do. You do. You can meet me anytime, by the way. Poor preparation and resilience to get it right. Isaiah, I got you, brother. 408. Is that Calgary? I'm a sucker for phone numbers. Canadian ones. Poor preparation, poor prep, and the resilience to get it right. That's another reason people blow up. So people blow up trading accounts all the time. Just like people start small businesses and they blow them up all the time. Anybody ever have a buddy open a restaurant? Restaurants fail, right? Retail businesses fail. Trading businesses fail. All businesses in general fail. Why? Poor preparation, poor psychology, lack of capital, bad timing, right? There's a whole host of things that happen in all sets of business. What we learn together, not only will you use in your trading, but these are the things that we use for everything. The tenets that I trade with, the principles that I trade with, are the principles that I use for the 5 other businesses that I own. They're the principles that I use to coach people one-on-one when they come to my house. I've had 250 students come and stay in my house over the last 5 years. 250. They come and stay in the room over there, and we come in and hang out. And when I'm coaching them, I use those same principles. So remember, your trading psychology is so important. We spend a lot of time in our boot camps going over these things. What our customers got to say about us. Guys, if you need phone numbers or emails, any customer I've ever had that you want to chat with, you let me know. I'll get you in touch with them. If you live in Paducah, Kansas, you want to talk to somebody in Paducah, Kansas, I know a guy. His name is Todd. Right? You want to know somebody in Shreveport, Louisiana? I got a guy. We call him Tyrone. So you want a friend in the Netherlands? My man Justin Postma right here. The Dutch pirate. So, I got students everywhere. And one thing you'll probably find about everybody that talks about me, 99.99% of people beyond ex-girlfriends. Just kidding. Everybody loves me. You can chat with any of them. Guys, the best way I think to learn is in a university style setting. All right. I know that right now in today's day with the Instagrams, videos, everything is so on demand. Like people are so about on demand. I want to learn on my phone and I want to learn like this and I want to learn like that and, so on and so forth. Well, you know what? This is a job. It's damn hard. It's no different being a doctor, a lawyer, whatever, right? There's so much to it. So you have to learn in a very specific way. So how we do our classes, we have a 60-day boot camp. I do 28 live classes just like this, where we teach strategies. But I start my students off at the dead beginning. No matter how much experience you have, I start everybody off at the dead beginning. We want to build a foundation. If you have a weak foundation in your house is going to crumble. So we start up at the dead beginning in terms of the software. We get the software out. We start to message. We start to figure out where everything goes. Actually, I got a lot of students of Southwest Florida, by the way. Start to figure out where everything goes. And we start at the patterns. We start the structure. And then we go in it. Every class we have is recorded and archived. You can go back to classes from 2014 if you want to. We do Q&A, quizzes, homework. Got to do it like this, guys. If somebody's not testing you on what you know, how do you know what you know? And you know what? I'll tell you what. Most of my students, they'll pay money for this. They don't want to do the test. They don't want to do the homework. They don't want it bad enough. But this is a game. I worked 2 hours today. I made $2,000. I didn't even trade that well. Pretty cool. But how do you get to that level? You think because you purchase a class and all of a sudden you just wake up and you're making money? No. We got to work. And you need a coach that's going to work you and tell you when to work. But then you still got to go out and do it. We do market recaps. At the end of each trading day, I get online and we recap my trades. Pretty cool. Yes, Blair, we've got a live trading simulator and we use it right on the charting platform that we use. So like you can go in your TC2000, see this stuff? And yeah, you can like put an order ticket in and next thing you know, like, and you can move this in anywhere and boom. Now you got this stuff and you can put charts. And yeah, we got a live trading platform, baby. Now, this is the beauty, though. When we have the live trading platform, right? When we have the live trading platform, I have the ability to grade your trades. So, like when you go through and, you know, and you want to see, and I'm just calling out Eric here because he just sent me his trades. But like Eric is one of my students, and like so like I can see all his trades. And it's kind of cool. So like each trade, and he labels the ones that he needs graded, Bo's review. So like I can click detail, and now see like he's uploaded his trades, but I can see exactly where he shorted and where he bought. I'm pulling this one up because I thought this was actually his best trade minus this particular ad right here, Eric, which was a little bit low. But I thought this was a really good trade. I'm actually kind of proud of him today. So I want to give him a little shout out because I know he's creeping around in here somewhere. He's always around. So that's actually pretty cool. So that's this type of stuff that you want to do in boot camp. Can somebody go out and grade your trades? Like, will somebody actually go and leave, like, look through this stuff and leave you a comment? So, like, one of the things that Eric did on this, like this particular trade, his first entry was awesome. His sales were pretty good. This entry I thought was his best. Then he sold and he sold. Then he rebought. This one was high. The reason it's high is because what? We just learned this. You need 3 tests for a breakout, right? So he bought on the second test. Tisk, right? So then he sold here, and then he bought here. Craig, I got you, man. You want to talk on the phone with me? I'll give you a call tomorrow, whatever. And then look what happens, though. So then he ended up buying it here. Him buying it here tells me he was getting emotional. This stock was up so much this day that he all of a sudden got in his mind carried away. Like, oh, my God, I got to get in this, right? So then he bought it and it went down. So overall, he made a couple $390 on it, but he chased this last one. So I can see all this, right? And I can I can leave him comments. And then when I leave him comments, they get emailed to him and, you know, they show up on a page and all this stuff. And it's kind of cool. So that's what it takes to learn. Will somebody actually take the time to do that kind of stuff with you? You've got to work on business plans and all this stuff. I know I'm probably scaring the shit out of 90% of you guys. 90% of you guys say, man, that's a lot of work. Well, it is. And if it is, it's just not for you guys. Frankly, we're looking for, right, the handful of people that are really going to take a few months to have me kick your ass. And you kick my ass. I like challenging students, people that question me and they want to know more. And they're calling me up at night. And they say, man, like, why is this not working? Or why is this? I love that. I never have a problem with the student asking me why the heck I did this or why is it like this. I love that because that's what I used to do with my mentor, Paul. But that's a lot of give and take. And like I said, man, this is, frankly, just a lot of damn work, right? You've probably been around the internet, right? You can make $1 million a year buying so-and-so's penny stock program. It only takes 2 days to learn, right? Like, oh shit, let me give this guy $2,000. His penny stock program will give me $1 million in 2 days. Not if you want to make money, right? Not if you want to make money. Just ain't gonna happen. So we've got all of this stuff on a module page. We got all this stuff on a module page where you can come in and all you guys will get a password. You'll have your trading platforms, your TC2000s up, but we've got a module page where every single class, registration, your quizzes, your homework, every single thing is all set for you. And by the way, you can watch, so I do classes live like this, but like you can go and watch like all the old boot camp videos. And guys, we have trading psychologists that have been on staff. So we've got a bunch of trading psychology videos by actual psychologists. Tons of just like anything you can think of. It's all here on this page. And then 4 days a week, I'm shredding class at night, 8 p.m. Eastern time, just like this. And that's going to be really, really important. You also get a 200-page course book with this. Bonus, we do live events once a quarter. You get a ticket to the live event. Usually they're going to be 2 days long. I think our next one will probably be in, everything is live, Byron. Life is live. Our next one will either be in Dallas or Atlanta. And I do plan on having a Canadian one later. But you have a ticket to a live event anytime you can use in the next couple years. So if we're doing one in Atlanta or Dallas, you can come to anyone you want. You also get an annual to our chat room service. So I trade live in front of people. I don't know what ClickFunnels or WordPress means. You get actual annual to our chat room. So I trade in front of our students all day. Well, that's a lie. I trade in front of them till I'm done trading. So, like today I trade till 127. And, hey, guys, I'm trading in front of them. And, I'm posting the alerts. But more importantly, the chat room is just the chat room. We've got an awesome group. But more important than that, I go to webinar like this, and I actually I trade in front of everybody. I have my trading platform up, and we shred, just like I'm going to do for you guys tomorrow. I'm going to kick some ass tomorrow and show you guys what American justice looks like. It's going to be pretty cool. So I'm actually pretty pumped to do that. Guys, we have, for first 5 people that come in, they'll get a one-on-one bonus session with me where I'll get you started in class. I'll work with you for an hour or 2, and we will have a Skype or Google Hangout. I will teach you what it takes one-on-one to be successful in this before class starts, or even after class starts. Type in your phone number in the question section. If you're interested in this special, it's a live event that you can come through. You can use that pass anytime during the year. We're going to have 4 live events. That's for the 60-day boot camp. Now, all my students get lifetime access to 60-day boot camp, by the way. You can retake this class as many times as you want. That's $25.99. It's normally $5,200. First 5 people get a bonus. So type in your phone number, and I'll have one of my guys call you. They'll do a free trading consultation, figure out your goals, what you're trying to accomplish, and then we'll move from there and get this thing started. Class starts next Tuesday, so that would be November 27th, guys, right after Turkey Day. The beauty of starting class after November 27th is this. That first month of coursework is going to be done by January 1st. Your 2019 goals that you want to hit to go XYZ places in your life, the class portion of what we do will be done. You will hit 2019 fully functioning with all the trading knowledge you need. We will be working on the extras, of course. We'll have to work on fine-tuning you, but you will have the trading knowledge in your class form by 2019. Guys, do you really want to start 2019 and then take class? You know what happens then? You're going to hit the ground running by the summer of 2019. That means it's going to be 2020 before you ever even get going in what you're trying to do. Sounds kind of stupid, right? The beauty of what we do, Blair, it's lifetime access. You come in on November 27th, you take a couple-week class, you go out of town. In January, when you start the next boot camp, you can take boot camp over as many times as you want. And that's where we're going with this. Hey, Ryan, I appreciate you. I look forward to having you in class. Good, good, good. Mikey, I look forward to having you in class. Isaiah, man, I look forward to having you in class. Appreciate you, man. Thank you. Cool. Tomas, my friend, good. I appreciate you. I will have you in the class. Next one, I'm guessing we'll do another one we always do them every 90 days. So February to end of January. Guys, our customers love us. You're going to love us. We're going to have ourselves a fun time. We have Black Friday deals coming. Black Friday deals coming. So, if you don't want one of the higher ticket ones, you just higher ticket stuff, you come on in. If you want to get into a mentorship program where you work one-on-one with me, we've got that type of stuff going on right now. I got a 6-month mentorship program along with the boot camp for $59.99. We do have tuition assistant plans. We have a Cadillac package. We got a Cadillac package for our 60-day boot camp and annual day trading. Now, if you just want to take the boot camp and you want to get a discount on it, we are offering 30% off our boot camp class alone too. So if you don't want all the fluff of all this other stuff, live events and stuff like that, you just want the boot camp, you can grab that with 30% off too. So we'll get you going. Guys, if you ever want to just chat with me, you guys let me know anytime. That's my cell. That's my email. And guys, this is my personal cell number. I'm not even shitting you. Use it. Text me right now. Let me see. Guys, whether you take my class or not, man, I love people, man. I love hanging out with people. You guys, send me a text. Let me know what you think of class. Dude, if you can't get a hold of your mentor on his damn cell phone, what'd you pay him for? Seriously. What'd you pay the man for if you can't get a hold of somebody on their cell phone? That's my cell. Man, give me a holler. 904, what's up, baby? Jacksonville. Appreciate you, man. 559. 503, is that Portland? Woo! That's got to be Portland, right? 514, that's got to be Montreal. Hey, Sean, how you doing? 404. Hotlanta. Hotlanta in the house. Good, 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 good. Sam, how you doing, brother? 561 South Florida. Danget, how you doing, brother? 713, that's got to be Houston. Mike Christopher, hello. Woo! 702, Hot Vegas. Good. Guys, a couple people have asked me, like, what do we do with the students that are overseas? That's a great question because I have actually quite a few students that are like in Japan and Australia and stuff over the years. And one of the things that I've noticed with people from over there and how they kind of adapt to stuff, number one, it's hard to make live classes when you're on a different time zone. Remember that every single class we do is recorded and archived. What usually my students overseas do, they're not going to hit the live class unless they just are crazy night owls. So what they'll do is they'll watch class, and then they'll either just call me or Skype me or email me with any questions they have. We have a private community that's set up also where you can ask questions. What we will be doing is putting our students in a Slack community. And I don't know if anybody has ever used Slack, but we'll have a Slack community where we can all chit chat with each other, and we can direct message each other, and, we'll be posting links and all that kind of fun stuff in there. And so in the Slack, like, you guys are going to be able to hang out and do everything that you need to do, and I'll be making sure I post links every day and kind of all that fun stuff. That's going to be just huge, guys. So just different things to kind of check out and make sure that we're going to do. All right. So that's how I'd handle it if I was overseas. Just watch the videos. Hey, TJ, so can your teachings be applied to ASX? So actually, it's pretty cool. So TJ, I actually got a couple students of mine in Brisbane, and then another one in the Gold Coast. I don't even know where that is. So we got a couple of our buddies that use this stuff. They trade on like commodity stocks and stuff like that in Australia. I guess you guys have like iron ore or some shit over there. That's what they use. Hey, Johnny, guys, Johnny's asking, can he use Thinkorswim or other charting? Guys, you do not have to use the charting platform that I use. You can use any one you want. My scans and stuff that I give you guys will all be like just there. Yeah, you can short in TOS 267. That's got to be Pennsylvania, huh? Hey, Maury, sure trader in the Bahamas, is it reliable? I'm not sure. I haven't personally used them before, but, we all got to get started somewhere. I mean, if you're going to trade with small amounts of capital, then you got to do what you got to do. Hey, Blair, I'm on the Gulf of Mexico, I guess. No, Gulf. Yeah, I guess I would be in the Gulf of Mexico. I'm not a mad scientist over here. Guys, great question. So few people have asked me, like, do we have any payment plans available? Like, what goes on with that stuff like that? Yeah, we do. Like, that's, we'll have tuition assistance and all that kind of fun stuff so that you guys can, my big thing is this. We'll get you in the program. We'll let the rest work itself out. My thinking is always this, like, you ever have like an idea and you wanted to do something and the next thing you know, it's like 6 months later and you're like, fuck, I should have done that. Well, trading is kind of one of those things. I get a lot of my students, they say like, man, I've been looking at your class for years. And it's like, well, if that was the case, we should have done something about this, right? Like, you've been looking at it for years. We would have been done with the job and you would have been where you wanted to be if we had started this years ago. So let's not let, I wouldn't let a few dollars here or there impact whether like you want to take class or not. Like, I'll make it work. My guys will make it, we'll work it out with you. So, put in your number, we'll do a trading consultation with you and we'll figure out the details on how to make it happen. I wouldn't worry so much about that. If you want to make it happen, we will make it happen. I got you, Ari. I'm on your team, baby. Josh. See, Josh, and that's what I was talking about. Josh said, man, I've been wanting to join for 2 years. So Josh is coming into my next class. And, it's like 2 years. Where could we have been if he started 2 years ago? Well, I mean, he would have been done. But Josh is really smart, man. Josh has actually got a head start. We're going to work fast. I got you, Josh. Derek's 210. That's the San Antonio? Eric Butler, man, I got your back, brother. I'm always in your corner. Guys, and by the way, I sincerely apologize. If I missed one of your questions, it's just because they came in fast. I didn't see it. Hit me up. Just re-ask. Hey, Dustin, do you use TC2000 for the live feed for the boot camp? Dustin, we use TC2000 for our charting, but the live feed, we use GoToWebinar just like this. Good question. Jared, by the way, for ASX, there'll be different charting platforms you use. We'll find them. Do you have payment plans for the mentorship package? Yeah, Derek, we'll figure something out. Like I said, I would not let guys, I would not let price of anything affect, what you're trying to do. We'll work something out and we'll figure it out. Good. What else? Hey, Fan. Are you in Montreal? My 2 business partners are in Montreal right now. Mr. Noveris, how you doing, buddy? Woo! Guys, man, I've had so much fun. Hey, Josh, what time am I on tomorrow? Am I live trading on YouTube Live or on this GoToWebinar? Hey, Mike, so I run classes at 8 p.m. at night, and that's like the class. Now, I do trade in front of everybody every single day, which you guys, as our students, have access to. So I'll be trading in front of you guys all day on video, which you can hop in anytime you want. If you want to watch all day, every day, you can. If you've got a couple days a week or an hour a day. And if not, I'll just record it for you, and you can watch it when you get home. But watching me trade live, it's kind of cool because, you get to see. So this is why people fail at trading sometimes. When you do a webinar or, say you read somebody's trading book, it's like they're cherry picking the best of everything, right? You ever read some old Cooter's fucking trading book? Like these guys that are on Twitter and stuff, they write these trading books. They haven't traded 20 years. They got these trading books, right? And they're super famous. But they don't even trade anymore. But you read their trading books and it's all right, they cherry pick the best of everything, right? I made this trade in 1987 and went up 7,000%. It's real life trading is a bare knuckle brawl, right? And so how do you take what's from a trading book to real life application? Well, somebody's got to go out and trade live in front of you on screen share so you can see it. What happens is you connect the dots from your book knowledge to your real life trading knowledge. So that's going to be really important. So if any of you guys want to come in every single day and watch me trade live, my trading platforms, hit the buttons, put in your phone number. I'll have somebody give you a call. Man, you can start watching me trade live right away and start learning and following along. And yeah, I'm pretty easy because, I trade in a really smooth way. So you guys are really, really like it. Mr. Christopher, you already took the boot camp, didn't you? Yeah. Hey, so a lot of people have asked, Mike, you have unlimited access to all boot camps. You just go to the boot camp module page. Good. So, guys, a lot of people have asked, do you do swing trading? Of course. Guys, you cannot day trade for your whole life, blah, 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 blah. You've got to be able to learn to do longer term trades, and you can only be a good day trader if you can do longer term trades. So we spend 5 classes on how to be a part-time trader, how to be a swing trader. And that's going to be really important. I have my mentor, Paul, come in and do that. And I do 3 classes. He does 3 classes on swing trading. You guys have got to learn how to do part-time trading. You have IRAs, 401ks, longer term accounts. That's going to be just really, really important. So, and guys, can you give me a heads up? Who here's going to be like a swing trader versus a day trader? Like people that want to hold stocks for 3 to 5 days and take like explosive chunks versus like, you know, scalping around all day like I do. Sean, okay, both. Ed, both. So good. So you guys want to be swing traders. That's awesome. So for those of you guys probably don't even know this because it's been a while ago. When I started Bulls on Wall Street, I shit you not, I only did swing trading. So Paul, my mentor, taught me how to swing trade because that's what he does. I made enough money from swing trading to quit my job, and then I went home and I started Bulls on Wall Street. And I was only doing swing trading. I did swing trading while I had a job, and then I saved up enough money to quit my job, and I was doing swing trading for a living. And then what happened is how I got into day trading is just by blind luck. So like I had a chat room at Bulls on Wall Street, right? Because I have this business now. I'm like a swing trader. So this is like 2009. So we're in the chat room and we're like the market in 2009 bottom. So every stock went up like every single day, right? So we were in like 3 or 4 swings, and like the swings weren't going down. They just go up every day. So I didn't have any, I couldn't sell them. So what ended up happening is like everybody got so damn bored in the chat room because we'd been just sitting on these swings and they were flying. But like we didn't have anything to do all day. And I'm sitting there at home, like I'm 27 and a half, 28 years old. And I'm like, shit, like what am I supposed to do all day? So like I just started calling out some day trades in the chat room based on the swing trading patterns that I had learned from Paul. And all of a sudden our swing trading strategy emerged from there. And it's not any really that different than the swing trading strategy. And so we teach both in class because, frankly, I might be a little bit better swing trader than day trader. Some days I make 2,000, other days I lose 2,000. So Blair, that's actually really common. What we have to do is, number one, lower your risk in your share size and come up with like a recipe for each type of trade pattern you do. So we would narrow down like all the trades you do into like 2 or 3 types with specific recipes. And then we would lower the share size and the amount of risk you can take on each trade. And your goal would really be just make a couple $100 for like, say, the first week. And if you make, for the first week, you're green, you make a couple $100, we would increase the risk. So then the second week, you would increase it, say, 25%. And then the next week, you would increase it a little bit. And what would happen is over the course of, say, a month, we'd get you back to kind of that 1,000 or 2,000, but we would have built it up like in a systematic manner with consistency. And all of a sudden, you'd really hit the ground running. Hey, so a lot of people have asked, like, what was my former job? I used to be a recruiter, like a headhunter. I used to place people in like engineering jobs, Indian guy in engineering jobs, right? Like I'm like a walking cliche. Yes, I was a headhunter. I placed people in engineering and commercial construction jobs. I actually really liked the job for the most part. Like, I mean, no job like when you're like sitting in a cubicle, like playing around with the phone all day and the headset is like awesome, but like it was pretty fun. Like, I mean, we had a cool office and stuff like that. And I always appreciated it. Blair, you're not a hack. You just don't have a method yet. I got you, man. I got your back. A couple of people have asked, like, what's the account size? It's like kind of, What's the account size that people should, hey, Damien, by the way. So guys, Damien's asking questions like, he's been scammed by a couple like, a couple of these kind of day trading chat rooms and stuff like that. Damien, what I would say, call me on the phone. You got my number, call me on the phone. A lot of times when you buy stuff, you don't know if anything is real. That's how I always feel too. Man, I read this trading book once. I'm like, man, this fucking book sucks, right? So I called that motherfucker. It was a trading psychology book. Not even joke. Call that motherfucker on the phone. He picked up. I go, dude, can you explain what's in this book? I'll pay you. And he's like, yeah, of course. He picked up my phone. Next thing you know, he was my trading coach for a while. If you can't get a guy on the phone, then he's just a vendor, right? He's just selling. You get a guy on the phone, FaceTime him, see what he's about. You're going to at least have a friend. And if you got a friend, that person's going to really they're going to be invested in helping you succeed. Whether you succeed or not, that's not a guarantee. But if you got somebody invested in it that's going to hurt if you don't succeed, that means something, I think. Good. Hey, Mike, by the way, dude, I got a couple of students in Houston I got to hook you up with. I got a couple that are like pretty sharp. I got to hook you up with them. Cool. Anybody else? How many trades should we manage at a time? Blair, I actually have a lock on my account at 3. And most of the time, like 2. I'd rather you be all in on like 2 than like have like 6. Hey, Taylor, where do you suggest we start trading real money? Taylor, does your dad tell you about any of this stuff? Where is he? Your dad trades with me inside my hedge fund. Inside our group, you can day trade with like $2,500. Good. Anybody else? Hey, Rafiq, what's up, baby? Which is the best broker to open account? Usually a lot of our students, they trade at Interactive Brokers. Brian, I appreciate it. Guys, who is going to be in tomorrow watching me trade and stuff? Man, we're going to have fun. We're going to get a little music on. We're going to do a little dancing. Man, a little fun. I ain't going to lie. It's going to be a lot of fun. Cool. Fun. My friend, I'm going to see you tomorrow. Appreciate it. Yes. Mr. Kramer, you see me trade 1,000 times. Come on. I got you guys. Guys, that's what it comes down to, man. Tomorrow we're going to shred because in the end, it's about how much you want it, right? How much you're going to work at it. We're going to do some work tomorrow. Just because it's Turkey Day don't mean we're going to be getting all fat. We'll be working. We got to hunt for dinner. Damien, we got people in the good old Louisiana. I'm telling you. Good. Anybody else? Speak now or forever hold your peace. Guys, it's been an honor. Seriously. I had fun. I apologize about the GoToWebinar mishap. That was my bad. Hopefully we weren't off too long, but I try to make up for it. So I challenge you. Email me. Text me. Come in. Do not let price or anything like that hold you back from starting 2019 hitting your ground running. Seriously. Don't waste another year. Man, you know how many times I've done a shoulda, coulda, woulda in my life? Well, next year when I get free time, I'm going to do this. You never get any free time. There's always a kid. There's always a birthday party. Somebody's always dying. One of your relatives is always bothering you. There's always a problem with your mom, your sister, your job, your boss is hassling you, your girlfriend's on your ass. There's never going to be a time where you're not so busy hoping for a rest break. I've been waiting for a rest break, a lull in my schedule for like 15 gosh darn years. They never come. Life gets in the way, man. Somebody's always going to be sick, and there's always going to be somebody's birthday. And you're always going to have a niece getting born and an uncle getting this. That's just life, right? So don't waste any time. Let's go do what we got to do tomorrow. You guys get some sleep. Try not to go out too long tonight because we got work to do tomorrow. I love you guys. I'm going to see you tomorrow. That's my number. That's my email. Put in your phone number and your email if you want to come into class. Remember, first 5 people get a bonus session with me. First 5 people get a bonus session with me. And that's going to be a fun one, man. We'll get on Skype. I'll show you my nipples. You can show me yours. Just kidding. 410, is that Baltimore? Now, seriously, though, we'll get on Skype. I'm going to hear what you're trying to do with your life. And then we're going to come up with a plan on actually how to get there. We're going to come up with a roadmap on how to do that. You know, as good as I am at trading, I'm really good at teaching. But, man, I'm one hell of a life coach. I have no problem telling people they're stupid. Just kidding. No, but I'd love to get on Skype with you, figure out where you're trying to go, what you're trying to do, and then work out a plan to get there. And I think that's going to be just really important. So I appreciate you guys, man. I know I swear a lot, and sometimes I'm just goofing around and stuff, but I'm trying to make class fun. Like, finance is boring, and so I put on a little show, but I really mean it. I appreciate it. I'm going to see everybody tomorrow. I'm going to do my best, give you guys my all so that you guys go into Thanksgiving with some excitement, some passion about what's coming next, because what's coming next is awesome, all right? I'll see you guys. Peace.